The firm determines that the outstanding balance of 45,000 takas is completely unrecoverable. The correct entry to write off this irrecoverable debt is Option 1. Debit irrecoverable debts expense account, credit trade receivables account. Option 2. Debit allowance for receivables account, credit sales revenue account. Option 3. Debit trade receivables account, credit irrecoverable debts expense account. Correct answer is debit irrecoverable debts expense account, credit trade receivables account. 2. At the start of the financial year, a firm has an allowance for receivables balance of 20,000 takas. At year-end, trade receivables stand at 500,000 takas. Based on an aging analysis, the accountant decides to set the allowance at 5% of receivables. What is the income statement impact? Option 1. A debit charge of 5,000 takas under operating expenses. Option 2. A credit adjustment of 5,000 takas under other operating income. Option 3. A debit charge of 25,000 takas under finance costs. Correct answer is a debit charge of 5,000 takas under operating expenses. 3. A company's opening allowance for receivables was 35,000 takas. During the year, irrecoverable debts of 15,000 takas were written off. At year-end, the required allowance is calculated to be 28,000 takas. The net amount charged or credited to the statement of profit or loss for the year's total debt movement is Option 1. 8,000 takas debit charge. Option 2. 8,000 takas credit adjustment. Option 3. 22,000 takas debit charge. Correct answer is 8,000 takas debit charge. 4. A firm receives 12,000 takas cash from a former customer whose debt had been completely written off as irrecoverable in the previous financial year. Under standard accounting conventions, this recovery should be recorded by Option 1. Debiting cash account and crediting bad debts recovered account other income. Option 2. Debiting cash account and crediting the customer's personal ledger account. Option 3. Debiting allowance for receivables and crediting retained earnings. Correct answer is debiting cash account and crediting bad debts recovered account other income. 5. At year-end, a business has total trade receivables of 630,000 takas. This includes a specific debt of 30,000 takas from a customer who has absconded. The management also wants to create a general allowance of 2% on the remaining receivables. Calculate the net trade receivables balance to be presented in the statement of financial position. Option 1. 588,000 takas. Option 2. 600,000 takas. Option 3. 617,400 takas. Correct answer is 588,000 takas. 6. Why is an allowance for receivables created at the end of an accounting period instead of writing off debts only when a customer explicitly defaults? Option 1. To comply with the prudence and matching concepts by matching expected credit losses with the period's credit sales. Option 2. To artificially reduce the current asset metrics for corporate tax evasion loops. Option 3. To ensure that the cash ledger balance matches the bank statement perfectly. Correct answer is to comply with the prudence and matching concepts by matching expected credit losses with the period's credit sales. 7. An entity's trial balance shows a credit balance for allowance for receivables of 18,000 takas. If no year-end adjustments are required because the expected defaults match this figure perfectly, where is this 18,000 takas balance presented? Option 1. Deducted from gross trade receivables under current assets in the balance sheet. Option 2. As an operating revenue line item on the face of the income statement. Option 3. Under non-current liabilities as a long-term provisions framework. Correct answer is deducted from gross trade receivables under current assets in the balance sheet. 8. A firm discovers that an irrecoverable debt of 8,500 takas was completely omitted from the adjustments worksheet. If this error is left uncorrected, how does it distort the final financial statements? Option 1. Current assets are overstated, and net profit is overstated. Option 2. Current assets are understated, and expenses are overstated. Option 3. Current liabilities are understated, and equity remains unchanged. Correct answer is current assets are overstated, and net profit is overstated. 9. Under the traditional classification of accounting frameworks, the comprehensive ledger account titled, Allowance for Doubtful Receivables, is treated as an Option 1. Valuation account contra asset account. Option 2. Nominal expense account. Option 3. Artificial personal liability account. Correct answer is valuation account contra asset account. 10. At the start of the year, a company has a 24,000 takas credit balance in its allowance for receivables. At year-end, the aging schedule indicates that an allowance of 16,000 takas is sufficient. The adjusting journal entry required is Option 1. Debit allowance for receivables 8,000 takas, credit irrecoverable debts expense or P&L 8,000 takas. Option 2. Debit irrecoverable debts expense 8,000 takas, credit allowance for receivables 8,000 takas. Option 3. Debit allowance for receivables 16,000 takas, credit trade receivables 16,000 takas. Correct answer is debit allowance for receivables 8,000 takas, credit irrecoverable debts expense or P&L 8,000 takas. 11. If a company's sales are 1,500,000 takas 80% on credit terms and it historically experiences a 1% default rate on credit revenue, what is the initial estimate for the year's bad debt expense using the income statement approach? Option 1. 1,200,000 takas credit sales yield a 1,200,000 takas baseline with 12,000 takas expense. Option 2. 15,000 takas based on total gross sales metrics. Option 3. 3,000 takas based on the cash collections loop. Correct answer is 1,200,000 takas credit sales yield a 1,200,000 takas baseline with 12,000 takas expense. 12. A company writes off a debt of 5,000 takas during the financial period. Under the direct write-off method unsupported by IFRS but used by some small firms for tax, the write-off entry is passed directly to expenses. If they switch to the allowance method under IAS 39, IFRS 9, write-offs are first processed against Option 1. The accumulated allowance for receivables account. Option 2. The retained earnings reserve ledger directly. Option 3. The sales revenue column of the current month. Correct answer is the accumulated allowance for receivables account. 13. While checking the ledger balances, an auditor notices that irrecoverable debts written off has a debit balance of 14,500 takas. This account balance is ultimately transferred to which final sheet? Option 1. The statement of profit or loss is an operating administrative expense. Option 2. The current liability section under Standard Corporate Trade Provisions. Option 3. The statement of changes in equity is a structural loss item. Correct answer is the statement of profit or loss is an operating administrative expense. 14. A business customer owes 50,000 takas to an enterprise. The customer pays 20,000 takas cash, and the remaining 30,000 takas is written off as an irrecoverable debt. What is the comprehensive double entry for this settlement scenario? Option 1. Debit cash 20,000 takas, debit irrecoverable debts 30,000 takas, credit trade receivables 50,000 takas. Option 2. Debit cash 20,000 takas, credit trade receivables 20,000 takas with zero other records. Option 3. Debit irrecoverable debts 30,000 takas, credit allowance account 30,000 takas. Correct answer is debit cash 20,000 takas, debit irrecoverable debts 30,000 takas, credit trade receivables 50,000 takas. 15. If an accountant overestimates the general allowance for receivables at year-end by making it 10% instead of the justified 3%, what is the immediate distortion on the published financial statements? Option 1. Net profit for the current period is understated, and current assets are understated. Option 2. Net profit for the current period is overstated, and current liabilities are overstated. Option 3. Expenses are understated, and total equity is reported with inflated figures. Correct answer is net profit for the current period is understated, and current assets are understated. 16. An enterprise holds a receivable balance of 100,000 takas from a client who is also a supplier to the firm for 40,000 takas. If the parties agree to a formal ledger contra entry set off, how does this affect the calculation of the receivables allowance? Option 1. The allowance percentage is applied against the net remaining receivable balance of 60,000 takas. Option 2. The allowance is calculated on the gross 100,000 takas ignoring the supplier ledger status. Option 3. The set-off requires a debit charge to the bad debt expense files instantly. Correct answer is the allowance percentage is applied against the net remaining receivable balance of 60,000 takas. 17. A company recovers an old written-off debt of 8,000 takas cash. The accountant records this by debiting cash and crediting trade receivables. What tracking discrepancy does this create in the customer subsidiary ledger? Option 1. It mistakenly shows that the customer currently has a credit balance or has overpaid their account. Option 2. It keeps the master balance perfectly synced with zero ledger anomalies. Option 3. It understates the total available cash inside the company's master vaults. Correct answer is it mistakenly shows that the customer currently has a credit balance or has overpaid their account. 18. Under IFRS 9 financial instruments, entities must utilize the expected credit loss (ECL) model for receivables. This model differs from the old incurred loss model because it requires management to Option 1. Incorporate forward-looking economic forecasts and historical default probabilities to estimate allowances proactively. Option 2. Only record provisions when a customer triggers a formal legal bankruptcy file. Option 3. Calculate allowances exclusively using fixed statutory scales set by the central bank. Correct answer is incorporate forward-looking economic forecasts and historical default probabilities to estimate allowances proactively. 19. At year-end, a business has trade receivables of 400,000 takas. It is determined that a specific receivable of 10,000 takas is completely bad and must be written off. A 5% general allowance is then to be established. Calculate the balance sheet value of trade receivables. Option 1. 370,500 takas. Option 2. 380,000 takas. Option 3. 390,000 takas. Correct answer is 370,500 takas. 20. If a customer's check for 25,000 takas is returned dishonored by the bank due to insufficient funds, what is the initial corrective entry passed before evaluating if the debt is bad? Option 1. Debit trade receivables account, credit bank account. Option 2. Debit irrecoverable debts account, credit bank account. Option 3. Debit bank account, credit trade receivables account. Correct answer is debit trade receivables account, credit bank account. 21. A trading concern has an opening allowance for receivables of 1,200,000 takas. At the end of the year, trade receivables are 25 million takas. Management wants to maintain the allowance at 4% of total receivables. The adjustment requires Option 1. Deducting 200,000 takas from the current year's operating expenses. Option 2. Charging an additional 200,000 takas as an expense in the statement of profit or loss. Option 3. A debit charge of 1 million takas directly within long-term equity columns. Correct answer is deducting 200,000 takas from the current year's operating expenses. 22. Which of the following internal documents provides a broken-down chronological classification of customer balances used to determine the necessary general allowance? Option 1. Age analysis of trade receivables, receivables aging schedule. Option 2. Sales day book summary sheets. Option 3. The general trial balance schedule layout. Correct answer is age analysis of trade receivables, receivables aging schedule. 23. A company has a customer balance of 50,000 takas that has been outstanding for over 360 days. Management decides to create a 100% specific allowance for this debt instead of writing it off. How is this presented on the balance sheet face? Option 1. The 50,000 takas is still included in gross receivables but fully offset by the allowance line item. Option 2. The 50,000 takas is completely removed from the gross asset lines and shifted to footnotes. Option 3. It is presented under current liabilities as a deferred performance balance. Correct answer is the 50,000 takas is still included in gross receivables but fully offset by the allowance line item. 24. If a firm collects 40 paise in a rupee from a debtor who owes 10,000 takas, what absolute value is recorded under the irrecoverable debts written off ledger track? Option 1. 600,000 takas baseline yields a 6,000 takas loss transaction. Option 2. 4,000 takas loss transaction. Option 3. 10,000 takas loss transaction. Correct answer is 600,000 takas baseline yields a 6,000 takas loss transaction. 25. A company discovers that a bad debt recovery of 5,000 takas cash was mistakenly credited to the sales revenue account. Correcting this error prior to publication will: Option 1. Have zero impact on net profit but correctly reclassify the item as other operating income. Option 2. Increase gross profit and decrease the cash asset balancing totals. Option 3. Increase total reported current liabilities by 5,000 takas. Correct answer is have zero impact on net profit but correctly reclassify the item as other operating income. 26. When preparing financial statements, if a customer is also listed as a trade creditor under payables, what process must occur before final aging schedules are locked? Option 1. An agreement to set off reciprocal balances via a contra-entry in the general journals. Option 2. Writing off the entire receivable leg as an automatic operational bad debt. Option 3. Doubling the general allowance percentage for that specific user block. Correct answer is an agreement to set off reciprocal balances via a contra-entry in the general journals. 27. Gross trade receivables at year-end are 800,000 takas. Specific bad debts to be written off total 20,000 takas. The opening allowance was 30,000 takas, and the year-end required allowance is 5% of remaining receivables. Calculate the net movement expense for the profit or loss statement. Option 1. 2,900,000 takas total expense line consisting of 20,000 takas write-offs plus a 9,000 takas allowance expansion. Option 2. 39,000 takas total debit charge. Option 3. 20,000 takas total debit charge with an unchanged allowance track. Correct answer is 2,900,000 takas total expense line consisting of 20,000 takas write-offs plus a 9,000 takas allowance expansion. 28. A business entity sets up its accounts under IFRS frameworks. If a major trade debtor suffers a severe factory fire after the reporting date but before statement authorization, the potential uncollectability is a.n. Option 1. Non-adjusting subsequent event, disclosed in the footnotes with no changes to the year-end allowance numbers. Option 2. Adjusting subsequent event, requiring an immediate restatement of the year-end receivables balance. Option 3. Prior period error item that forces a retrospective rewrite of opening cash balances. Correct answer is non-adjusting subsequent event, disclosed in the footnotes with no changes to the year-end allowance numbers. 29. The ledger account tracking allowance for doubtful accounts always shows a normal, blank, balance because it acts as a reduction mechanism for a, blank, asset account. Option 1. Credit, debit. Option 2. Debit, credit. Option 3. Credit, credit. Correct answer is credit, debit. 30. If a company operates with a zero balance in its allowance for receivables and experiences an immediate 50,000 takas client default on the last day of the year, the adjusting journal entry is: Option 1. Debit irrecoverable debts expense 50,000 takas, credit trade receivables 50,000 takas. Option 2. Debit allowance for receivables 50,000 takas, credit trade receivables 50,000 takas. Option 3. Debit bad debts provision 50,000 takas, credit sales revenue 50,000 takas. Correct answer is debit irrecoverable debts expense 50,000 takas, credit trade receivables 50,000 takas. 31. A wholesale dealer has a receivables turnover ratio that slows down from 12 times a year to 4 times a year. This operational shift implies that: Option 1. Customers are taking significantly longer to settle debts, increasing the risk of bad debts and requiring higher allowances. Option 2. The firm has tightened its credit terms and collected outstanding liquid cash effectively. Option 3. The entity can safely dissolve its year-end provision frameworks altogether. Correct answer is customers are taking significantly longer to settle debts, increasing the risk of bad debts and requiring higher allowances. 32. When an accountant passes a closing entry at year-end for the Irrecoverable debts expense ledger account, the entry is: Option 1. Debit profit or loss account, credit irrecoverable debts expense account. Option 2. Debit irrecoverable debts expense account, credit trade receivables account. Option 3. Debit allowance for receivables, credit irrecoverable debts expense account. Correct answer is debit profit or loss account, credit irrecoverable debts expense account. 33. Given, opening allowance equals 15,000 takas, bad debts written off during the year equals 6,000 takas, closing allowance required equals 10,000 takas. What is the net credit debit to the statement of profit or loss for the allowance adjustment alone? Option 1. A credit income adjustment of 5,000 takas to the income statement. Option 2. A debit expense charge of 5,000 takas to the income statement. Option 3. A debit charge of 1 million takas to the long-term equity sheets. Correct answer is a credit income adjustment of 5,000 takas to the income statement. 34. Under the allowance tracking architecture, when an individual customer account is physically written off as bad, how does this specific ledger step affect the net book value of total current assets? Option 1. It has no effect on the net book value because both gross receivables and the allowance decrease by identical values. Option 2. It decreases the net current asset value by the exact amount of the write-off. Option 3. It increases the available cash metrics within corporate banking columns. Correct answer is it has no effect on the net book value because both gross receivables and the allowance decrease by identical values. 35. A company records its financial transactions according to CA Bangladesh guidelines. If a debt recovery of 10,000 takas occurs after the customer personal ledger was cleared, What sequence of entries restores the account for transparency before recording cash? Option 1. Debit trade receivables, credit bad debts recovered account. Option 2. Debit cash account, credit sales revenue files. Option 3. Debit suspense account, credit trade receivables tracking loops. Correct answer is debit trade receivables, credit bad debts recovered account. 36. A firm has trade receivables of 200,000 takas. It sets up a 3% general allowance. In the subsequent year, economic conditions improve, and it reduces the allowance to 1%. This reduction will be presented as Option 1. Other operating income or a reduction in distribution costs in the statement of profit or loss. Option 2. A direct increase entry inside the share premium equity column schedules. Option 3. An adjustment item presented within the statement of cash flows operating segments. Correct answer is other operating income or a reduction in distribution costs in the statement of profit or loss. 37. If an auditor notes that gross receivables have expanded by 40% while the year-end allowance for receivables remained unchanged without justification, what accounting principle is violated? Option 1. Prudence and consistency principles. Option 2. Historical cost convention. Option 3. Money measurement framework. Correct answer is prudence and consistency principles. 38. A sole proprietorship entity has trade receivables of 85,000 takas at the end of the year. The owner decides to write off 5,000 takas from a relative who refuses to pay. The entry to record this personal transaction is Option 1. Debit drawings account 5,000 takas, credit trade receivables account 5,000 takas. Option 2. Debit irrecoverable debts expense 5,000 takas, credit trade receivables account 5,000 takas. Option 3. Debit capital account 5,000 takas, credit sales revenue 5,000 takas. Correct answer is debit drawings account 5,000 takas, credit trade receivables account 5,000 takas. 39. When calculating a general allowance for receivables using an aging schedule, higher percentages are applied to older debt brackets because Option 1. The probability of default increases the longer a debt remains outstanding and unpaid. Option 2. Older accounts carry historical cost elements that must be adjusted for price inflation. Option 3. It allows the firm to artificially increase current liabilities to optimize tax targets. Correct answer is the probability of default increases the longer a debt remains outstanding and unpaid. 40. A retail firm has an opening allowance for receivables of 40,000 takas. During the year, it records 12,000 takas in bad debt write-offs. The closing allowance must be maintained at 5% of year-end receivables, which stand at 600,000 takas. What is the total combined charge for irrecoverable accounts in the statement of profit or loss? Option 1. 200,000 takas consisting of the 12,000 takas write-off plus a 2,000 takas allowance expansion requirement. Option 2. 30,000 takas flat debit charge. Option 3. 42,000 takas total debit charge. Correct answer is 200,000 takas, consisting of the 12,000 takas write-off plus a 2,000 takas allowance expansion requirement. 41. If a corporate customer enters into a formal liquidation process and its liquidator announces a final dividend of 30% on all unsecured claims, how does the creditor firm handle the remaining 70% matching a 100,000 takas claim? Option 1. Write off 70,000 takas immediately as an irrecoverable debt in the current accounting entries. Option 2. Keep the full 100,000 takas as an asset line item until the liquidator completes operations. Option 3. Shift the 70,000 takas balance to non-current intangible assets under goodwill tracking. Correct answer is write off 70,000 takas immediately as an irrecoverable debt in the current accounting entries. 42. The creation of a specific allowance for a specific named customer account differs from a general allowance because the specific allowance. Option 1. Is established due to known, unique indicators of financial distress linked to that explicit debtor. Option 2. Completely eliminates the asset balance from the subsidiary sales ledgers instantly. Option 3. Bypasses the statement of profit or loss and adjusts capital reserves directly. Correct answer is established due to known, unique indicators of financial distress linked to that explicit debtor. 43. Given year-end trade receivables equals 300,000 takas, opening allowance equals 10,000 takas. If the firm establishes a new general allowance of 4%, calculate the absolute ending balance of the allowance for receivables account. Option 1. 12,000 takas. Option 2. 2,000 takas. Option 3. 10,000 takas. Correct answer is 12,000 takas. 44. A company's cash book shows a collection entry of 15,000 takas for an old bad debt recovery. When preparing the statement of cash flows under the indirect method, this 15,000 takas non-operating income included in net profit must be: Option 1. Deducted from net profit in the operating activities section to avoid double counting with cash inflows. Option 2. Added back to net profit under working capital adjustment schedules. Option 3. Disclosed as an outflow segment within long-term corporate financing activities. Correct answer is deducted from net profit in the operating activities section to avoid double counting with cash inflows. 45. If an accountant forgets to post a 6,000 takas credit entries lag to the allowance for receivables account, but records the debit to the expense account, the trial balance will show: Option 1. The debit total exceeding the credit total by 6,000 takas. Option 2. The credit total exceeding the debit total by 600,000 takas. Option 3. Perfect balancing total since it is an error of principal classification. Correct answer is the debit total exceeding the credit total by 6,000 takas. 46. Under IFRS standards, if an entity sells its trade receivables portfolio to a financial institution factoring without recourse, any remaining expected defaults or bad debts are: Option 1. Transferred to the factor, the entity removes the receivables and stops maintaining allowances for them. Option 2. Retained on the entity's balance sheet under a continuous involvement provision track. Option 3. Written off directly against the opening capital base of the institutional founders. Correct answer is transferred to the factor. The entity removes the receivables and stops maintaining allowances for them. 47. A business entity sets up its financial reports according to CA Bangladesh parameters. If credit sales expand dramatically while collections drop, the Days Sales Outstanding (DSO) metric will. Option 1. Increase, indicating and worsening receivables quality that requires expanding year-end allowances. Option 2. Decrease, signaling excellent liquid cash management across retail distribution points. Option 3. Stay identical because ratios are calculated independent of operational credit timelines. Correct answer is increase, indicating and worsening receivables quality that requires expanding year-end allowances. 48. Gross trade receivables at year-end are 500,000 takas. It is discovered that a 20,000 takas credit sales entry was recorded twice in error. After rectifying this error, a 5% allowance for receivables is to be set up. Calculate the final net receivables value. Option 1. 456,000 takas based on an adjusted gross receivables.